Hello everyone, it's Gil. It's actually Sunday morning. I'm not going to wait till the futures open up because, as we've seen, what the futures do on Sunday night doesn't really have too much bearing on what happens on Monday. Last Sunday night we had the futures coming off overnight, and they were down for the most part until we got it up to about 2 hours before the opening on Monday, and then everything flattened out, and the market rallied, and then of course it rallied and then rolled over again. And I think the whole week was pretty much representative of what I'm talking about in terms of the news flow causing things to swish this way and that way, and makes it very difficult. I still think you can take advantage of the news flow by being opportunistic. So I wanted to cover some ideas that I had over the weekend that weren't in the written report. And some of these are maybe a little bit offbeat, some of them less offbeat, but we can start with the first one is Acacia Communications. This is one I've been talking about before. It never went anywhere. It's mostly been a victim of the ZTE ban, where the Chinese company ZTE has been banned from buying components from U.S. companies. Acacia, I guess, is 20 to 30% of their business, I believe, comes from ZTE. Don't quote me on that, but it's somewhere in there. And I've been watching this thing after earnings. It came out with a Bible gap up here. You can see the big volume. Let's go to a black pen, and you can see you have the Bible gap of huge volume. So it's very big volume, but it doesn't go anywhere. It's a bit of a, shall we say, a slider, but more sort of a slider spinner, because you can see it opens up down here, it rallies up here, and then it rolls back and closes unchanged. It really is a spinner, but it has a bit of a streak attempt up here, and it just slides back. So it's kind of embodies all three types of Bible gap ups, which only serves to make it more confusing in terms of buying the Bible gap up. But if you notice, you do have a low here at 37.40. So you close on Friday at 37.60, so you're 20 cents above that. So to me, that triggers an undercut and rally based on the intraday low of the Bible gap up day. So the other reference point you have here is the 200-day moving average, which is sitting here just above 36. So that is in a buyable position, and I'm wondering if, with the trade tiff being put on hold at least until November, the U.S. and China are saying they're going to work towards putting together a roadmap to a settlement by November. Not necessarily a roadmap to a settlement, but a roadmap, or not necessarily a settlement immediately, but a roadmap to a settlement. So, okay, whatever works. But I think the key thing is it may put some of the rhetoric on hold and the ratcheting up of tariffs as everybody tries to show how tough they are. Anyways, you've got this situation, which I think is low risk, closing Friday at 37.60. The intraday low of the Bible gap up day is 37.40, and the 200-day line is, let me check my little indicators. I'm trying to remember which one it is. There we go. Your 200-day line is at 36.59, so that would be right here. And it's 3.64% above it. So that can also serve as a pretty tight selling guide. Anyways, I think that's an interesting idea. It's one I'll be watching this week. Let's continue through the list, and we'll go through Billy, which I talked about in the report, it had the undercut and rally through this low. And that's pretty much the absolute low in the pattern. So you're trying to set up here, but you're sitting underneath this low, I believe. Let me check that low real quick. So that low is 1070, and you closed on Friday at 1070, so you're sitting right at it. Now, a move above the 10-day line might trigger this as a long situation. The only problem here is, of course, as I mentioned in the written report this weekend, you do report earnings next Monday, so you'd be looking for a pop ahead of that. But notice how it's just been trending lower and lower, and now it's looking pretty ugly. And you could come up with a pod theory type of situation here. So, for example, if I look at a weekly chart, let's open up another window here, another charting window, and we'll go down to my weekly chart, which is here. And you can see you have this 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks down, and you've undercut on the weekly chart all these lows. This actually, in terms of an undercut and rally, it looks in a very like it's in a very viable position here for a potential pod type setup where you rocket back to the upside. I've been looking at all these Chinese names over the weekend, And for the most part, I'm not seeing a lot of concrete setups. A lot of the moves occurred on Friday. And so, for example, in a setup like Baba, for example, which I believe reports earnings this week. That's not even on the list here, but we won't let that stop us. They do come out with earnings on the 23rd, which would be, I believe, Thursday, and that's probably before the open rather, on Thursday morning. So you want to watch for that. But you can see that it did undercut this low here actually on Wednesday, and a lot of these did. Billy did the same thing, and wasn't really watching those, or I saw them, but I wasn't really interested in buying them because I wasn't sure what was going on with the whole trade TIF thing. But it's almost as if the stocks knew, they were becoming oversold, and they knew that something was up. And so you got this undercut and rally here. And part of that was also, I believe, the Wednesday evening news that there's going to be a small delegation of Chinese, lower-level Chinese trade leaders or trade officials heading to the U.S. at the end of August, which is coming up in the next couple of weeks. So, in fact, I believe the end of August is 2 Fridays from now. Anyways, so you have a little undercut and rally in this, but it's very difficult to pick these off here. Some of these are a little bit extended off the low, so I'd want to see some kind of a retest in this situation. So let's see, getting back to my list. So you could look at Billy is one that I think is interesting, but they come out with earnings next week. Now Huya is one that's already, I still love that name, Huya. Anyways, before I get carried away. Now you notice you are undercutting these lows over here on this side of this little consolidation. So what you have is a reference point here at 27.05, and we closed Friday at 25.61. So you're about $1 and 40 something cents away from that. So you could watch for that as an undercut and rally. Now there's another way to look at this, and that is that you did have one undercut and rally attempt on Thursday, and it sort of failed. But what we'll notice here is the volume dries up here. You're drying up on these 2 days as you're coming back in. So it's a little bit of a white coffee and retest of this low. So that makes me think maybe this thing will pop off of here and turn back on the upside. So we'll be watching this one closely tomorrow. But these are stocks that are in better positions for undercut and rallies based on the low here. And then you have the lows here, which is 28.40, and that's actually closer to the closing price, I believe. Yeah, kind of in the middle, I guess. So either one of these lows can be triggered, and you'll obviously this one would be triggered first, and then you might watch for a second trigger on this low here, and they've already come out with earnings. So I think that makes life a little bit easier. I think IQ is coming out with earnings. I was reading sometime in October. I don't know if that's true or not. I got to double check that. But here you're sitting here and you're underneath this. This is not really a low, so you can't really call that a low. This is your low. And you notice the pattern is very similar to Huya. This is considered the Netflix of China, okay? I want to know about the Roku of China. But anyways, that's another story, and I'll get to that in a little bit. So you've got a low here that I would probably use for my first reference low, and that is 28.01. And you closed Friday at 26.38. So you're very close to that. The other thing is you could even be at a bottom based on a sort of white coffee and retest of this low. I don't see any bingo bars here. I think it's probably too early for bingo bars to show up. But again, you've got a stock that was a hot IPO. It's broken down, and now we're zooming back to the upside. So if we look at a weekly chart, you can actually see that this one's held up better than the rest. Because you haven't broken down sharply. It's not like you've come all the way down here and now you're trying to turn. You've actually come off less of this move up, so you're about a 50% retracement. So you're getting close to a point. That was pretty sloppy. Let's try that again. You're getting close to a point in here where you've retraced 50% of this move. See, I can cut it right in half, about right in here. But yeah, that's about right. Close enough. Could be 61 point whatever Fibonacci dudes like to use, but it's in that zone, so that's something to keep an eye on, I think, and it's a little bit of an ugly duckling type of idea. And it's also based on the premise that the Chinese stocks are going to have some of this pressure that they've been experiencing, in fact, since January, when the Chinese markets topped, because we've looked at that before, the FXI, the China Large Cap ETF, and we see that started a third leg down recently by breaking out to the downside. So here it is here. and that's your third leg down. But notice how you found support and you're back up into this little flag. So maybe, you're on top of this structure here. So maybe that's a low for the Chinese markets, and you see some of these names turn. So I'm going to go after some of these ugly duckling names. Anyways, let us proceed. Carbon black, I think probably is worth keeping an eye on. I thought this might hold the 20-day. It did not. But notice how volume is excruciatingly low in here. And I think it was something like 76% below average on Friday, and you're retesting. So that would be a retest of this low, the Wyckoff-ian retest of this low here, and you look for possibly a move back to the upside. That might be feasible. We'll see. Continuing through my list. This is my list of A number 1 ideas. I just named it that so it would show up at the top of my HGS list. Coupa Software hanging tight. They don't have earnings until early September, so that's about 2-3 weeks away. Holding very tight in here. I like this. This looks pretty interesting to me. And it's a reasonable trader. 809,000 shares a day is $67 stock, I believe. 67.17. That's in position using the 10-day line as a stop. Huya we already talked about. IQ we already talked about. I thought this was interesting because KLAC is another semiconductor manufacturing company. They make machines that make chips like AMAT. And AMAT blew apart on Friday after reporting earnings Thursday after the close. But this one initially came down in sympathy to AMAT, and it perfectly filled this gap, if I'm correct here. Let's check this very quickly. Your high is 108.03. Your low is 108.36. So it came within 33 cents, close enough for hand grenades, hydrogen bombs, and gap fills. So that will work for me. And so you filled the gap. You held the 50-day moving average. You only closed. You're 2.6% above the 50-day moving average, so you can see that here. I sort of like having this as a readout on the left side when I'm going through my charts because I can look at everything and see where everything is, as opposed to, say, MarketSmith, where you have to click on this and it gives you a few items. It doesn't show you the opening price, which I think is a flaw in any case. But I used to be way back in the day, back in the early 2000s, late 90s, I used to be involved with the development of daily graphs online when it first went online from the old books. And that was one thing I think lately they're missing. They should have the open, high, low, close. That's to me that's all critical data in understanding what happened on a particular day. Lumentum is interesting to me because it's holding tight above all of the moving averages now. I don't know. I don't think it's below its 200-day. But if we look at it on a weekly chart, what you can see is you're above the 40-week and the 10-week, and you're holding tight. And even though it looks like a big spin out last week here, it's actually a supporting week at the 50-day line. And they came out with, I believe it was 144% earnings growth. I'm going to have to check that real quick. I'll just look at my this is one thing I use MarketSmith for, basically, is checking the earnings, at least from an O'Neill perspective, because O'Neill does adjust their earnings. There were certain things Bill thought were irrelevant that should be taken out. So when O'Neill shows an earnings number, that's their own internally developed number. But they tend to be pretty accurate, so I'll stick with them. Although I don't really rely on earnings and sales 100% to pick stocks. I mean, Roku I liked at 35, and it had no earnings. Now finally you get one quarter up, and they're loving it over there at IBD as a breakout, and I'll get to that. But anyways, this looks interesting, and I'm thinking maybe a retest of the 200-day line, which they're showing here is a 40-week. You're 4.5% above it, so I'd like to see a pullback maybe down 2% above that if we got it. So let's get back to the list. Okta hanging very tight along the 3 moving averages, the 10-day, 20-day exponential, and the 50-day, and volume drying up pretty nicely. I think that was minus 60-something%. I'm trying to remember these from memory because this will only show up intraday, and probably should have the guys over there make me a little box for after the close volume levels versus the 50-day, and that would show up a little better. Anyways, but you can get the idea just by looking at the chart. And that looks like it's in a buy position. You got earnings coming out on September 6th, so you want to be careful there. OpenText already came out with earnings. Notice how it undercuts this low here. let's see if I got this right. The low is 38.29. You hit a low on Friday at 38.32. So not quite, but it does test the 20-day line successfully, and you close 1.07% off the 20-day exponential. So in my view, that's pretty tight. So closing price on Friday was 38.83, and the 20-day exponential is at 38.41. So that's in viable range, and I believe it's also, for those of you who like these things, a little bit of a base breakout. I'm not sure where the high of the base is, but you get this little flag here following a gap up move here. So the viable gap up has failed, but they can set up again, as we know, as flag formation. So this is looking reasonable. Perspecta I talked about in the report. We'll see how this one works out. They've been getting more government contracts, but I think the viable gap up remains in force. But you like to see these things show a little bit of upside oomph, you know. Pivotal Software, this is one I've talked about before in the reports. It finally pulled a little undercut and rally. That's sort of flopped around, but then you get a pocket pivot on Friday. Earnings come out on September 12th. Qualcomm is an interesting situation, and I probably should have been on this sooner because you had a viable gap up here on very strong volume, and they've blown off the NXPI purchase, so that's was viewed as a positive, I believe. And it probably makes sense for them. And you get you notice how you get 1, 2, 3 pocket pivots along the 10-day line on the last 3 days of the week. That it's a little, it might look a little extended, but it's sitting there at the 10-day line, and you have 3 pocket pivots in a row, and it's holding tight. It looks viable using the 10-day line as a selling guide to me. And it is a big stock NASDAQ name, and I think the NASDAQ is looking, or at least among the big stock NASDAQ names, you're looking for things to take over for NVIDIA and Netflix. Although, as I wrote in the report over the weekend, Netflix may be in a position for a reaction rally. Here we have Spotify, and I was tweeting about this when it undercut this low here, right here, and then retested it on a Voodoo volume signature here. And now it's pulling in the 10-day and 20-day with volume running about. Let's see, we can do this real quickly. Just go over to MarketSmith. Your volume level is minus 20%. Not a huge dry up, but the best place to buy was off the 50-day, obviously, in hindsight. But you may be setting up to move higher. So it's a Momo name, and that's a low risk spot because you just blow it out if you break the 10-day and the 20-day. Anyways, getting back to my Square, I talked about it in the report, just mentioned it in a note. Sitting there with volume drying up pretty sharply, right at the 10-day line, very tight, so it looks like it wants to go. Take Two, video gamers for the most part are all dead in the water. This one doesn't know what it wants to do, but it's flopping around in here, and it's pulled into the 10-day and, well, into the 20-day here with the volume drying up. So it might be setting up in here. They were the only one that reacted positively to their earnings report. EA and Electronic Arts and Activision, ATVI, Activision Blizzard, both kind of blew up. But a couple of things to look at on those two names, just as a point of reference, is that you've come down and you're now undercutting these lows in here, and you've broken below the 200-day moving average. You're starting to get some oversold action in here, and I keep wondering whether maybe they're going to turn. Reuters estimates, which is what HCSI uses, are showing a next quarter estimate of 46.59% earnings growth, which is a big pickup. So you may be at a point where this is good for an ugly duckling trade, and your two reference points are this low. Well, the 200-day moving average is one, obviously, because then that would be a moving average undercut and rally. And then your other reference point would be the low here at 69.27. I believe you closed Friday at 69.15, so you're just underneath. Then you have this low here, which is 69.87, and then you got this low here, which is 69.67. So I believe you're below all of those lows, and they're all within easy range of a UNR undercut and rally type move that would also take you above the 200-day. Now, once you get it back above the 200-day, the easy thing to do there is just use the 200-day as an additional selling guide and figure it should hold. Although you do use the lows of the prior lows as your selling guides for undercut and rally type moves. Anyways, let's continue, and I want to get this get through all these. Take two Zen. I actually bought a little bit of this on Friday. It's sitting at the 20-day line. You had a gap up move. Good earnings report apparently, and it's just holding tight. Volume dried up on Friday, so that looks interesting here. And I would keep an eye on the whole cloud group. So let's see. Zscaler has also been acting well. It didn't look like garbage on Wednesday. I actually said in my video report that this looks bad. But once you regain, I did mention that you're undercutting this low in here, and so you did pop above it. So you had two pocket pivots in a row. Earnings are expected on September 5th. Anyways, I want to talk about a couple of things because people seem to get hung up on this idea that you can slap a label on a chart and then that means you do X or you do Y. So if you say something, for example, is late stage, then that means you short it. Well, no, you don't, because you don't know if it's late stage. As I always say, late stage is as late stage does. Now, people over at IBD like to tell you that, 3 to 4 bases and you're getting late stage. Well, I've seen a lot of leading stocks make 4, 5, 6, 7, 8 bases, sometimes more, and just keep going higher. So you don't know that anything is late stage. And when I'm talking about this as a potential short, same thing with Roku, and I'll get to that to finish off this report. You're not saying this is X and therefore do Y. You're saying this is possibly a late stage pattern if it fails. Now, what we see here, and I actually was playing this long. I was short. It came in slightly on Friday. Then I flipped long, and it ended up and closed at a new closing high, an all-time closing high. And you're trying to break out of this base, okay? So you got the tops along the highs of the base here. You're just above it, so technically within buying range. You kind of floated down or floated up on lighter volume. So, but I'm watching this, and my thinking is, okay, this could be a late stage failed base, but it's not until it fails. Someone wants to get into an argument about me whether something looks late stage or not. I don't get into that at all. I don't care if it looks late stage or not. What I care about is whether it acts late stage or not. And in this case, it's not acting late stage. So what you've got going on here, though, is you got a pretty choppy, funky base, but this is kind of Workday's trademark, because you get all this choppy action. It breaks hard, undercuts this low here, undercuts this low here, and then turns and rallies. So where's the best entry point? The breakout? No. The undercut and rally. Now you move up, and now you start chopping around. Now you're breaking out. I'm a little bit wary of buying breakouts, but on the weekly chart, you got volume up and it's breaking out. So it's not a late stage failed base. And you won't say it's late stage until it acts like it's late stage. But, if you want to start getting into all that garbage, which to me, it's just pointless drivel, arguing over whether a pattern looks like this or that, and therefore you do this or that. It's just stupid, okay? I'm not going to mince words. So you got one base here. Is this another base? Is this another base? Is it 3 bases or 4 bases or 3.5 bases? I don't know. I don't care. All I'm doing is watching to see how this acts. And in fact, this became a good short back then, and I believe I played this for a short. I probably talked about it in the reports. I have to go back and look. And it was playable. And then it got down to the 200-day line and undercut these lows, and you cover the thing. And you take your profit and then see what happens. And it just turned and kept going. So, that's what late stage to me is all about. When something gets into a position where you've had 3 or 4 or 5 bases on the upside, if the market starts to roll over and it goes into a correction, even just a 10% correction, 7 to 10%, you're going to get some short sale opportunities, mostly out of stocks that are failing very quickly on recent breakouts. And you can see that in Electronic Arts. Did the same thing. It had this breakout here. It ran up, and then it tried to break out of this little flag, and it failed. So it became shortable in here. And you've seen that. I think Activision was the same exact thing. But, you get good shorting moves. And then I start looking at these things from the long side. Now, here's a cup with handle that failed. And you could argue this was late stage, but it really wasn't late stage until it failed. Now, let's go to our friend Roku. And I got to tell you, in this market, and for the last few months, this is my favorite stock. There's enough intraday volatility that you can trade it. And you get really heavy when it pulls back and then fly out of it when it runs up and then come back in when it pulls back, and it seems to do that in a pretty orderly fashion. But for those of you who might want to follow a trend, I talked about this down here when it was at 35 bucks at the bottom of this pattern, and the reason I thought it might turn is because I was hypothesizing that this was a potential pod formation at least, that would produce a rally back up to the old highs, because it was a hot IPO for good reason, and it continued to to break down once it topped and rolled over. It continued to break down and went down over 50%, just over. And now it's back up to the highs, and it's made an all-time high last week, and now it's pulling in. Your volumes decline, but you notice you're getting supporting action off the lows. But I talk about this, it could be a potential pod, punch bowl of death, short sale formation, but just because it might potentially be one doesn't mean it is one, and it doesn't mean I would just start shorting it if I can somehow magically determine that it is a pod. This is a pod. Slap a label on it, now let's go short. No, that's an idiot's way of approaching it. So, you know, somebody on Twitter thought I was short the stock just because I had talked about it as a potential pod. That's what a pod will look like. 50% deep, 13 weeks down on the left side, 19 up on the right side. It occurs after a big run on a hot IPO and then breaks down. That's a typical IPO pod formation. But what do we know about this market? We know that in this market, typical formations don't really work out the same way as they did in the past. So this may not work out in the same way as it did in the past. I've talked about how Cisco in 1995, I think it was 4 or 5, let's say 1995, how it did the same thing. A similar formation. It broke out of a 4-week handle, and then it just spent the next 13 weeks going sideways. Now, what's different about this market versus 1995? Well, 1995 was a big tech boom year, if any of you were trading that year, and that was the first year I made over 500%, mostly with a stock called C-Cube Microsystems. And what happened at that point was Cisco took 13 weeks to break out, and then it took off. So it didn't set up as a pod. It actually ended up going higher. But I remember that. And I remember that the 4-week handle was not sufficient to send the thing higher. Now, this is a QE market, and that's the main difference between now and 1995. And you got all this money sloshing around out there. Also, Roku is a very powerful growth situation in its space. And I'm going to send out an article that somebody emailed to me. Someone who's probably one of the smarter, and I don't mean to imply that anybody's dumb, but who has demonstrated some acumen in terms of understanding businesses, industries, and companies. And I know that this person built a decent position in Funko down at the lows at around $8 when I first started talking about it. Anyways, so now you've got this cup with handle breakout, and it's not failing. So it cannot, absolutely cannot be a pod failure until and unless it breaks below the 10-day and the 20-day. And for now, what you have here is a Bible gap up, and the thing's holding tight. And on top of that, if you look at my indicator bars, we're going code blue. So to me, this thing looks like it wants to go higher. And what you like to see after a Bible gap up is a stock that gets moving and gets moving fast in a big way. So I think Roku might have that potential. I mean, it's a staple in our household, and I really like the idea that you can get all these, you know, your Netflix and everything else off of it. It's all in one place, and you can get other stuff off of it. And you know, I'm not really a big TV show watcher. I got my couple of shows I like to watch, but that's about it. And my kids are really big on it. I mean, that's where they watch pretty much all their movies and everything. They don't even know what TV is. Anyways, this is holding in tight. Notice how volume dried up. And on Friday, it dried up to minus 36%. That qualifies as a voodoo volume dry up, and it's holding tight. You're 6 days after the Bible gap up day, and I think you may be ready to turn. And these guys are just turning into profitability, so it's a little bit of a turnaround. And guess what? That doesn't fit Can Slim, because Can Slim does not say you should have one quarter of earnings up. And of course, in Bill's book, he goes into long detail about, well, are the earnings like 30 cents or are they 1 cent? Are they real or are they just tiny? And in this case, they're tiny. But in this market, that doesn't matter. You've got a 3/4 acceleration in sales. And these guys thematically, I think, fit in with the whole thing. And with Netflix falling by the wayside, Roku may become the new Netflix. There's even talk of Netflix buying Roku, which could happen. The two companies are actually situated in, I believe it's in Mountain View, right next to each other. So I know the area pretty well because it used to be my old stomping grounds. I went to Stanford. I worked for several companies in the area. Anyways, so that's my take on all of this stuff. Hope it was helpful. And enjoy the rest of your Sunday, you guys. Take care. Bye-bye.